Hello and welcome to the trade setup. Today I wanted to provide a quick update for United Health. In the last video I provided the green scenario, which is still on the chart, but I also want to add the yellow scenario here, which would be a one that ended here instead, wave 2 here, a wave 1 of 3 here, a wave 2 of 3 in the making right now. So for this, the support zone would overlap with the green scenario, which is why I am actually not going to keep this support zone on the chart, but it was only to highlight that we do not turn bearish on this chart if we break the green scenario support zone. Okay, now I want to go directly into the lower time frame where we had the top form here and then 3 waves down, A, B, C, that could have either formed and finished the 4th wave here. We did reach the support zone, we did react, we don't need to go lower to fulfill any expectations. But it's also possible that we only finished wave A, and now we would be coming up in wave B, where we would form a larger A, B, C. That could actually even surpass the high here. And then it would still take us lower in wave C. Okay, now we also have the white scenario on the chart, which would say that we had the wave 1 here, wave 2 up, wave 3 down, wave 4 up, still in the making, and wave 5 down, which would complete only the A wave, after which we would complete a higher B wave and then go still lower in wave C. These are not targets where I'm placing these on the chart. These are just ideas, let's call them. So going on the lower time frame, we had this wave A up, which could also be labeled as a wave 1. But for the sake of the white scenario, I will track it as wave A, and wave B could also be a wave 2. Wave C could be a wave 3, but until we form 5 waves, this will be seen as a correction move, or until we break the resistance up to $431. Okay, last time I did already provide you with the support zone for wave A, and we were around the bottom part here of the move down, the local down, and I cautioned that before we complete this wave B, that we could see the price move higher in wave B before we go lower in wave C. So what we currently have on the chart is wave, hold on one second. So it would be a wave A that has finished last time as well, I think we had already finished it then. So wave A, a wave B up that reacted to the golden ratio at 61.8% retracement, and then a wave C in the making down. By the way, it doesn't have to be this correction doesn't have to be A, B, C. It could be a W, X, Y, which would allow it not to complete 5 waves, as you see here, that I'm adding now for the wave C to the downside. So this is what we are tracking, but it's not a requirement for this correction in wave B to be complete. It could end prematurely here at the end of wave 3, as it would be labeled now. In wave C, we do possibly have the 1, 2 complete with 3 in the making. And I also want to provide the target, because we do have the wave A and B complete, and it would be the 100% extension of wave A at $279. Now let me remove this micro count for wave C. So ideally it gets here at $279, but it doesn't have to get here. It can stop at the 78.6% extension at the 50% retracement, or also it doesn't have to stop here at the 100% extension $279. It can get even lower, down to $263, and still be just as probable of a successful trade. I also need to mention this scenario doesn't break completely until we break the low here of the wave A at $249. So for now, we do have our support zone here. We do have our target, ideal target for wave C. So what this means is that this is the trade setup, right? What I can recommend, if you don't know when to enter in this case and you do want to enter, to scale in this manner, where at the top where you decide that, okay, I want to enter here, you enter a small position, and the position you deliberately choose around the support zone entries where you make larger and larger positions, you enter larger and larger positions. And I find that quite useful. It's a technique I have seen recommended sometimes, or actually not just sometimes, quite often. And why is that good? Well, it's because you know the invalidation point for this scenario, this A, B, or 1, 2, is here, $249. Well, if you enter here at the 78.6% retracement, what do you have until complete invalidation? Like 5.5%. Well, that means you can enter a position that's even twice as large as what you enter at 50% retracement, and actually risk less money. But to not get this video to become too long, this is the trade setup. I ideally, remember, $279 ideally, but doesn't have to be exact. I hope you enjoyed the video, and if you did, please subscribe. I will continue to provide updates for this chart and the others that I am covering. If you want me to cover a specific chart or asset, please let me know in the comments, and I hope you have a nice day. I'll see you in the next one. Bye bye.